Good afternoon this Thursday, May 29th. Well, just a brief reaccount of what you already know. A court ruling that Trump's tariffs were not workable. Of course, it's going to be worked around. He'll appeal, as already has, to an appellate court. Loses there, he goes to the Supreme Court. And even if he loses there or doesn't want to use that, he has several other avenues he can use through the emergency orders to keep the tariffs in place, to keep working on his negotiations with other countries. They're not getting a pass. And so the grain trade opened higher on that last night and faded throughout the day. But come the close, the wheat trade showed something different, showed that the V bottom that occurred over a week ago that we have discussed was setting up is showing some validity that a possible rally can occur. I'm going to show you something. We can rally in late May into early June. And along with that, the cattle trade firming up after 2 days of weakness this week, back to $300 on the feeder cattle. Live cattle also showing strength on the August contract, back to 210. As the cash market staying stout this week, not wanting to give in. We're seeing the trade either steady or higher with last week. So when will this cash trade start to soften? We'll find out. But let's look at some charts right now and walk through it. First off, on the weather, as we're getting plenty of water where they need it throughout the country, except for they don't like a lot of rain anymore on the wheat areas where the harvest is underway. They start harvesting wheat here in Wichita Falls, Kansas. They don't like this rain, and this is a lot of rain through Saturday, June 7th. They already have disease pressure, especially up into Kansas, where they wouldn't mind a dry spell and some heat. And that's not the case, as we're starting to see rust could start way into their production. And so that is allowing wheat to do what we had discussed was setting up over 2 weeks ago. We discussed this V bottom, the way the market collapsed through this channel support that went through last fall and held. And even though we spiked through moving average resistance, stayed under trend line resistance, the bears, they still show that they have got some power. But they can't drive it down here now. And this turnup is not creating any technical action that we say, oops, we're going, but is showing the willingness to see buying when other markets are softer. Here's December Chicago wheat. You can see a left shoulder. Here's a head, a higher right shoulder starting to build. We need to go above a neckline, which is these prior 2 points. Got to close this December Chicago wheat, getting it above the 590 range, starts to say 580 range, 585, starts to say something bigger is building here. And as far as saying, how can wheat rally? It broke. It stays down May into June. Well, yeah, but let's keep in mind, we typically rally from a January, February low into May. And instead, we've been collapsing since February into May, early May. Actually, May 13th to be exact. And let me show you something. The last time we rallied was 2019 when the market broke from February into when? May 13th. And turned up and never looked back and put $1.50 on into the end of June. So whether that occurs now or not, we'll see. But something is shaking there. Kansas City wheat, same thing too. A different kind of a head and shoulders development. A little lower on the right shoulder, but here too, we need to see a neckline closed above the $5.50 range on July. Kansas City can send us probably to levels that are concerning as they're dealing with possible production loss from rust, either stripe or mosaic. Or maybe it's the rationale that China has lost a lot of wheat production in its northern regions. Now, Minneapolis wheat, interesting. 2 weeks ago, we showed you this chart. Go back and watch the video. I said likely holding the low 570 range, and we'll probably head up and check out the channel. Well, that channel is based off of spiking through this moving average of 224 period on our green chart. I'm going to show you something in a second. And we can get a spike into the 640, 650 range where we would sell out old crop and make new crop sales. And if you look at this green line going back to 2022, we sold every one of these spiking of the green line we always talked about. And now we're going to get another spiking of the green line that we're going to want to sell into. And these are things we are watching for on the wheat trade. Now, soybeans today, we did an ABC break through the 200-day moving average, 1050, closed back above it today. But we need to see some movement going back to the upside here to say that we still have a fourth wave C in play, as November beans struggle pretty bad in here too today. A Friday close of higher levels tomorrow are needed to keep us encouraged. Otherwise, we're going to have to say sell some new crop beans in here as the market is looking to be in trouble here going forward, as we're getting undersold by Brazil on beans and on corn through Argentina. And that's what drove this corn market lower here over the last few sessions, falling below the 200-day moving average. We don't get above the 200-day moving average tomorrow, the market could be in near-term trouble. Otherwise, if we can, then this is probably still an ABC bounce for a B wave. Everything is ABCs, ABC, ABC ups. We get these ABCs and subdivide. I'm getting tired of it. ABC, it's just ABCs everywhere, no trends. And so we'll see here, possible recovery if corn were to get back above 455 tomorrow. Never say never. If it doesn't, then this is a B. This B goes back over to here, and we're still in that C of wave 2 down to the 417, 420 range. Cattle, well, here too, subdividing ABCs. Could have been a B wave higher there on Monday, the way they worked lower into the close of, I should say, Tuesday and Wednesday. Then we get this power move to the upside today. Cash trade holding 221, 222 in Kansas and probably in the South, allowing for maybe a subdividing recovery here. Wave B could still be up into the 213 range here as we do an A, B, C recovery. That is plausible before a C wave decline. As you can see, a B wave could be here into that 213.5, 214 range. Then we do a C wave on the August contract. Not necessarily as deep as 198, but that's so far in the future. Anything's probable and possible once the cash market turns softer. But these are just targets that we watch for. And this trend line has always been instrumental in finding those lows, but they were always a black swan event. And we'll see if we get another black swan event to create that one. Feeder cattle here too. Could have been a B wave rally on Tuesday. If not, B, this is an A wave B. This is A. Then you're getting a subdivided B with an A, B, C to the upside. That could still see something around 304 on feeder cattle before again turning lower. Again, trend line, black swan event, probably a black swan event, but setups that this still is the high. And so rallies are to be sold. That gap did not get plugged on Monday's action. Interesting, we get through Friday. If we don't plug that gap and get to, I believe it was 301.32 or something like that, don't plug that tomorrow. That would be very interesting. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.